This is my edition of the Market Watch. I'll try to do this each morning to give you some reading on what I think is going to happen for whatever that's worth. As I look at it and I watch my morning squawk box, it just appears to me that more and more the market is being influenced by Washington, D.C., more than the corporations that are part of the market. And I don't know if this is good or bad. We're seeing we saw jobs go up by 1.8 million, but I think this is based on the opening of the economy of past month and not reflective of the future closing of the economy, particularly with what's happening in Florida, California, and Texas. So this is a temporary thing that we put on 1.8 million jobs. I think the jobs market or the jobs are going to go down again as the economy, particularly retail and restaurants, close down again. So that's part of what's going on. The other thing that really troubles me is that everything is focusing back on Washington. We're now the White House is saying is involved in TikTok. They're also talking now about shutting down WeChat. Well, WeChat is part of Tencent, and Tencent is an enormous company. It is probably the tech company of China. And we're getting into a Cold War with China around technology and closing our doors to them, and they're closing their doors to us. And this is all getting to be what's driving the market as opposed to the profits and losses of the companies that are of importance in our market. The relief program from Washington, again, both sides of the aisle are fighting. We've got one side that wants to give away $1 trillion and another side that wants to give away $2 trillion. It seems to me that there's probably a compromise in there. I don't think anybody would argue that there is no need for some relief at this point, but it doesn't make sense that they fight over this and then make the victims the U.S. citizens. I don't get this, and probably if there wasn't an election just a few months away, none of this would be happening. But everybody is fighting for their jobs. The whole House of Representatives is up for vote. You've got, of course, the president fighting to show I'm strong against China. I'm the one who has brought this under control. Under me, the economy is booming, except for the pandemic. If that hadn't happened, we would be in Fat City. But that's part of the problem. Um, Beyond the relief program, we have the change in supply chain. The White House is alluding to this morning that there will be more loans, let's call them Kodak loans, to pharmaceutical companies, to who knows what, to hold the supply chain intact so that if and when another pandemic should occur, that we have the wherewithal within our country to supply the needs that we have to stem such a pandemic. So again, Washington is stepping in again. Last week we had the tech hearings. Again, Washington is stepping in to control the stock markets. I'm not sure this is a good thing, bad thing. It just is. And as investors, we need to react accordingly. We need to be aware that the shift in the market is moving towards Washington. Um, we know, I think, that the economy is going to close back down, but I think we also need to recognize that as it does, there will become more weak companies, and those weak companies will falter and the big six will step in and eat what they want, and the rest will just go away. To that end, I'm going to do a video next week that deals specifically with who are the targets in this coming market, who are the vulnerable, and who, more importantly, who is it the big six wants to own so that they can propel themselves into the future. That's what it's really coming down to. Who are going to be the survivors and who are going to be the victims? Who's going to come out of this with strength and who's going to just disappear off the map? The markets are becoming more and more complicated, but at the same time, they're becoming more and more simple because fewer and fewer players are going to be at play.